All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I'm going to do what I do every day for you. That's break down the way I personally approach the market. Why do I do this? I do this because if you want to join me, you should have an understanding of the way I approach the market, right? You may not resonate with the way I trade, and that's okay. Right? So if you don't resonate with the way I trade, you spending your money or my time would not be productive for either of us. But for somebody who is or does resonate with the way I approach the market from a very traditional perspective, I believe could benefit from joining us in the live market, where I'm providing analysis, interpretation, and expectations of what's happening at the moment and what could potentially happen on the horizon. Now, of course, you need to employ your own trade planning, your own risk management. I'm not here to do that for you because that would mean I'm accepting the role of somebody who has personal and unique knowledge of your finances, which I don't, nor do I have any interest in. So let's just kind of talk about the way I traded it this morning. I took one and done. We had crude oil inventory reports at 10:30. We had new housing numbers at 10 a.m. But the big thing on the docket today was FOMC meeting minutes at 2 p.m. So indices were not favorable this morning. Gold did take a nice plunge that we identified through some high volume lows, which we had perspective. If we pushed through there, we had some real big expectations, which were fulfilled. But I'm going to tell you exactly how I played it. So take a look here, crude oil. What you see on my screen, top left, is my 4-hour chart. This is where I do my higher time frame analysis on, derived from weekly, daily, 4-hour. Bottom left is the U.S. dollar indices futures. I always keep an eye on what the dollar is doing. It can affect crude, it can affect commodities broadly, it can affect the indices broadly. So something I keep an eye on, not something I trade, but something I do actively watch. And here you have a 5-minute chart of light sweet crude oil. So I just want to put something in perspective here for you and kind of hide the drawing aspect, and you kind of see how raw of a chart that I actually trade with. It's just volume and price action, 2 VWAPs, that's it. Now, I do have a reference chart, which is the chart that I share with everybody to take a look at, see the pivot points and all the different other technical perspectives that are provided by this market and the other markets that we trade, and that's on a 3-minute time frame. We look at that. I like to see multiple time frames, especially on the short-term basis. I like looking at the 5-minute, the 3-minute, the 1-minute, because the more data I can compile around an idea, it allows me to build a case whether to take that trade or not to take that trade. My trade plan is very specific, and I will only take a trade if my trade plan is met. But if there are certain components that are not in line, then I will more often than not just stay away. So as I came to the computer this morning, it was pretty early, about 6:45. You can see we're making this kind of topping pattern here. We had some big wicks below. We just didn't get any momentum here over 78.30. We just kind of hovered around there for a little while. And I really wasn't prepared to trade at that point, guys. I was getting set up. I was turning the computer on, making a cup of coffee. So I don't like to rush into taking a trade. I like to let the market, I want to watch the market, see how it's acting, get acclimated and a feel for the context that we're in, be able to look to the left, make sure we're not hitting any key specific levels based on prior price action that could cause my trade to potentially not play out well. Now, understanding that, I know that each trade is placed in a unique situation, and there are unique variables that come with that. But that is what it is. That's just part of trading. So market makes this top here. We roll over, and we're retesting this high that was placed here at 2 a.m. And I want you to see, I'm going to zoom in so that you can kind of see exactly what I saw. We started bouncing back and forth here, okay? And we started getting some really strong buying absorption in this middle candle. So my thoughts at this point were like, well, if we push through here, we push to the VWAPs, right? I think that's probably likely to happen. I'm also looking at this little high over here as well, just short of the VWAPs, thinking that that may be the best time and place to take profits very quickly and then just tighten up my stop. So as this candle printed with all that buying absorption there, I mean, I placed this trade at like 11, and I think I put my stop here at 15. I mean, I was running a super tight stop. Because if I was wrong, I was wrong. We were going to run back to the highs, right? Like, I wasn't prepared to take, you know, a 20 tick risk. But if I was right and all my criteria kind of fell into place, we would fall here, and this was what I was targeting, was 93. So, all right, it wasn't huge. It was like 18, 19 ticks. Whatever, okay? Like, I can live with that. So I took some profit here as this took this really aggressive push. And then I moved my stop to my entry thinking, hey, the VWAP could turn things around, and I don't necessarily want to be along for that ride. But if we push a little deeper, I'm now looking at this high over here at 77.75. So in fact, since this started to work and I started to see liquidity resting here, I jumped on the mic a little early. We started at 8 o'clock, but I said, hey guys, we're sitting on the VWAPs right now for crude. If we take this little consolidation, we got a couple little candles here. If these couple candles hold, we should drop into 75 pretty quickly. Okay, so it did hold for about 10 minutes, and then we dropped right into 75, where we went on to reverse and basically retest this level again, put a lower low in, come back, retest this level again, put another lower low in, a slightly higher low than the previous low. Here nor there, it got super choppy. Inventory report at 10:30. I just was done, right? I had one trade, worked out really well. I was pretty happy. I told my traders about it. You know, so like I said, 17, 18 ticks, 30, 35 ticks, and I was done. I was out. My expectations were a push here to 60 and then a push here to 45. So I did leave a little bit of my trade on to see if it was going to happen. It didn't. As I saw that we were starting to bounce here, I took my stop for my entry and I put it right over these little consolidative candles here at the VWAP, thinking maybe we come back, hit the VWAP, and then go lower. Didn't happen. Got stopped out. It is what it is. You can't do anything about it, right? That's part of the deal. Understanding that you're going to take losses, understanding that you're going to get stopped out. Your entire position is not going to do exactly what you want to do. More often than not, you have to learn to not live with, learn to live with the disappointment of that not transpiring, because that is the reality of trading. So that's how I played it this morning. And then I just left it alone. I mean, you can see we were just rocking back and forth here. I was not interested. And then, we got the opening bell, and then we got all kinds of stuff. But, and then the inventory report. I just wanted nothing else to do with it. I took a very successful trade. And more often than not, guys, if I come to the market and I take my first trade and it really does, if it just works, right? Like it doesn't have to give me everything, but if it works, I'm normally done for the day. Okay? Like, I came, I saw. I don't want to sound cocky by saying I conquered, but I conquered my trade plan. It's not about making money, it's about following my trade plan. I followed my trade plan to a T. It worked this time, as it should over a period of, continual trading. And that's it. I'm done. I'm out. It's over. There's no reason for me at this point in my life to sit here and nickel the market. Now, some people do that. What happens to those people is more often than not, they just end up giving back their profits because they're playing rather than trading. Okay, this is not a casino. This is not entertainment. This is not for fun. This is real money in the greatest place in the world where it is the most competitive. You have to understand something. The market's not out for your money. Other traders are. Right? The market is just a facilitator, right? A facilitator of buyers and sellers. At the end of the day, there's other buyers and sellers that want your money because it's a zero-sum game. If I made money today, it's because somebody else lost money. On the days I lose money, it's because somebody else made money. And that's the way you have to think of it, because that's exactly what it is. Your edge is your trade plan and your risk management approach to the way you trade the market. Period. You must do it consistently with a great deal of discipline. So that's how I played it today, guys. If you enjoyed this video, make sure you like it. If you have a question, feel free to leave a comment below. If you want to learn more about who I am and what I do and what kind of trader I am, there's some links below. You can click on that, consume the content. My email is there as well. I appreciate you. If you haven't subscribed to the channel yet, please do so. God bless, and I'll see you in the next video.